What's up, everyone? Hey, it's my mortgage guy, Greg, here with another Wednesday wish on what I wish I knew about the mortgage process. And I wish everybody knew that cash is just truly not accepted. There are times we can get around it, but overall, if you have cash money sitting in your safe, your drawer, your under the mattress, or anything of that nature, listen, you're not going to be able to deposit that money in your bank account and then use that for down payment and closing costs. It's just not accepted because we don't know where the cash came from. And there is just strict rules, regulations, guidelines on what has to happen with that cash. Overall, any money to be used in a transaction has to be sourced. It's called SOFs, SOF, sourcing of funds. So, yes, there are times that we can paper trail, right? We can source those funds. For an example, if you sold a home and then you got a net profit and that money went into your account and we show the closing transaction and the money going in your account. And then let's say you withdrew a certain amount of money from that money and you took it out, right? Let's just say it's $20,000, $10,000, what have you. If we can see that deposit go right back in your account with not too much time elapsed, and it's the exact amount, dollar for dollar, that you took out, we explain it, we give an explanation to the underwriter. It's underwriter's discretion whether they're going to accept that or not. So you do run the risk, but that is basically the only time and chance and opportunity we have to source those funds and put it together. We basically have to see the original withdrawal and then the new deposit and really have it make sense. If it doesn't make sense to an underwriter who signs their name on the deal and is locked on that deal for the next 7 years and the secondary market and everything can come back on the underwriter, if it doesn't make sense, they're not going to sign off on it. So whether it's a purchase or a refinance, for an example, on a refinance, if you refi and you want to put a large lump of money down in order to lower your principal balance, which gives you a lower overall payment, which that's what people would do on a refinance, that money has to be seasoned in your account for a minimum of 60 days. So if we're going to get, let's say 75 days, right? Because we're going to get 60 days of bank statements. So if we get 2 months of your bank statements and we do not see that abnormal, very large deposit that's going to require an underwriter to question it, then that money is considered seasoned in your account and we're not going to even see the deposit. We're not going to question it. And quite honestly, we're not going to care about it. So if you have money sitting there and you have goals to purchase a home or aspirations of looking to refinance and you want to put that money down on the balance, but if that money's sitting in your house and it's cash money from odd jobs and saves and gifts or anything that you receive that's sitting there, you need to go ahead, get that deposited into the bank as soon as possible. Unless you have the scenario that we can paper trail everything perfectly, but that's something you want to go over with your loan officer as soon as possible and see if it's something that's going to get approved. But overall, I suggest get that money in right away, get it seasoned, make sure you can get 2 months of bank statements without seeing that money. There are some times we only need 30 days of bank statements, which might fit your scenario. But overall, safe than sorry, get it deposited in the bank, get yourself seasoned, and then you'll be able to use that money. Have a great one. Talk to you soon. Bye.